Good morning once again. This is John Taylor with Senior Enrollment Solutions. You are tuned into the Roadmap to Success, August 12th. We will try and keep this limited to an hour's time. To respect your time, we're going to get started here as it is about a minute after. I do see individuals still logging in. Once again, if you have questions, you have concerns, you don't quite understand what we're covering last week, this week, next week, what have you, please go to our SES Agent YouTube channel, email us, text us. We'll provide you the previous webinars. But without further ado, it is 10 o'clock, so we're going to get started here. First and foremost, quick disclaimer. I know some of you have been tuned in week after week, which has been amazing, really launching your business to a whole nother level. And that's why we created this whole 22-week from nuts and bolts of Sales 101 to understanding the human nature of sales as a whole, right? And controlling the conversation, building your business, what you should be doing, what you shouldn't be doing, best practices. So many of you have employed these best practices into your business, and it's amazing to see where we're going to take you this upcoming annual enrollment period and beyond. Obviously, we're going to review topics. I always want to bring you back to Insurance 101 and Sales 101. This is so important. As new agents are on and new agents continue to come on, we all reach this point of wanting to puke all of this information to our consumers because we know it all and we're so proud and we're so ready to provide too much information to you. Recall that you really always need to bring it back. Keep it simple. Sales 101 never fails. If you need additional assistance into the basics of sales, please reach out. We'd be happy to provide that information to you. Once again, we will have additional time for questions and answers afterwards. I will be on for another half hour, 45 minutes, so you can talk to me directly. If you need any additional topics covered, any information, please send over your request to SES, and I'll provide all that information if you don't have it towards the end of the webinar. So without further ado, Medicare Advantage plans. Let's discuss really the nuts and bolts to Medicare. And it's interesting to me after nearly, well, I should say a long time in this industry and tons of business personally written and even more business written as a nationwide NMO, FMO, I see certain trends. I see the trends and I pick up the trends not only on the initial, on the marketing side, but I also see it on the back end, on the commission side, which I'll come into in a moment and kind of circle back to this. But I really want for you on this particular webinar to truly understand your Medicare Advantage plans and the consumers in which you're most likely going to provide those plans to, and then the Medicare supplemental plans and the consumers in which you typically will be providing these plans to. The marketing for these consumers will be vastly different, and I'll explain why here in a second. So let's just begin 101. What is a Medicare Advantage plan? It is a plan that's going to offer the consumer coverage that's either as good as or better than their original Medicare Parts A and B. Repeat that for me again. Medicare Advantage is going to offer coverage that's as good as or better than the original Medicare A and B that consumer has. In many instances, you're going to obtain, or the consumer will obtain, additional benefits, right? The value-added benefits, the vision, the dental, the hearing, the transportation, the over-the-counter benefits that aren't included in their original Medicare. Above and beyond that, with the Medicare Advantage plan, what they've done is they've taken that per occurrence, not annual, that per occurrence Part A deductible, and instead of providing or having that consumer have to hit that deductible and then pay 20% thereafter, they once again just simply limit it to a copayment, right? That you're paying 395 days for the first 6 days and then we got the rest covered, or whatever the case may be. So with those co-payments on a Medicare Advantage plan, it gives the consumer the peace of mind that if I have to go to the primary care physician, it costs me $5 instead of 20%. If I need physical therapy, it's going to cost me $50 instead of 20%. So it co-payments out the Part A and Part B of the original Medicare, but there are many situations where it's going to be the same as having original Medicare. The difference being now that you're stuck in carrier A's network or carrier B's network. And so it really comes down to the network and the medications, which we'll cover here in a second. Medicare Advantage is just like health insurance. You have co-payments, you have deductibles, and you have a maximum out-of-pocket not to exceed, now it's up to $8,000 on some plans, but the government really sets us at $6,700 a year. You're not paying to have this level of coverage, right? So with a Medicare Advantage plan, agents always ask, or consumers always ask, how do they get away with offering this coverage at no cost? They're reimbursed by the federal government to keep the consumer out of the hospital. They're managing your care. That's why they're HMOs, right? They're health maintenance organizations, most of them anyhow, and that's where really the industry began. They're there to manage your care. So what the government does is they pay them a per month allotment, basically between $900 a month for a very healthy person to $16,000 a month for an HIV individual on their plan, to manage and cover that care. And that's how your Medicare Advantage plans get paid. They get paid because your federal government, CMS, doesn't wish to deal with the claims of the Part A and the Part B, and they'd rather pass that off to a more efficient provider that can handle the claims and the processing, once again, more efficiently, and therefore there's no cost to the consumer, a very little cost to the consumer. With the Medicare supplemental plan, you are purchasing additional coverage through a private insurance carrier that's going to cover only your A and B. And really what you're doing is you're prepaying to have this level of insurance to know that I can go anywhere I want to go as long as they accept my red, white, and blue Medicare card. And I'm going to be covered at or damn near 100% for any medical necessities that I need to have done. I'm prepaying for this level of coverage. I'll never get a surprise bill in the mailbox. I know exactly how my insurance operates, but they're going to need the Part D, the prescription drug plan. And they are also going to be missing out on the value-added benefits, the dental, the vision, the hearing, etc. So Medicare Advantage plans front load the policy. They front load it with the things that the consumers typically need on a day-to-day basis. Those consumers most oftentimes purchase those plans off the dental benefit, right? Which is not why you should be purchasing insurance, but that's how they're sold. And right, $50 a month on a give back plan or what have you, and boom, the consumer sold. Now they don't have prescription drug coverage, and it's a nightmare. So with a Medicare supplemental plan, once again, you're prepaying for that level of coverage. You'd need additional prescription drug coverage. If not, you're paying a penalty. And then the consumer would need to purchase additional dental if they chose to have it, or additional dental, vision, hearing, or what have you, to be able to bundle and really make sure that they have everything that they need for their health care. Now, one thing as an agent that we went through last week, which I apologize, I have a slide out of place, but we'll fix that here in a second. Last week, we discussed the marketing side of it all. Last week, we discussed who is that consumer and how to market to them. And that's really important in regards to keeping that retention. So with a Med Sup plan, once again, you're looking to obtain 3 to 5 contracts from this consumer. With a Medicare Advantage plan, you have your Medicare Advantage, you have your final expense. You may have an additional add-on dental plan, which isn't a bad idea, and a hospital indemnity plan. You may also discuss moving some kind of annuity, whether or not they have a $5,000 or $10,000 CD, getting that structured for them. With a Med Sup consumer, you have the Med Sup policy, you automatically have the Part D policy built in. So now a hospital indemnity, annuity, a life insurance, a one pay, or whatever the case may be, gets you to those 5 contracts. It could just be a Med Sup, a PDP, and a dental plan will increase your longevity and your retention of that consumer tenfold. So begin to build in the hospital indemnity automatically. That should be a 90% closing ratio, especially on the MAPD. Don't leave it off on the Med Sup. It's certainly there for them as well. But when you incorporate those additional policies in, once again, your retention is just going to absolutely skyrocket. So once again, my apologies, we were a slide off. Week 16 review, if you were not on or you haven't viewed the video yet, we discussed marketing. Either that it's free or costly, but it is something that is imperative to help your business grow. SCS offers marketing co-ops for you. If you have marketing needs, please reach out to us. Well, we went through a few weeks ago the multi-plan approval, right? If you need new trifolds, tear-offs, table tents, whatever it may be, please reach out to us and we'll help you get that all created and or approved. There are so many different forms of marketing out there and they will create a different rate of return. It is so important that you recognize this. If you are handwriting out envelopes to consumers and you're handwriting out envelopes in blue, try it in green or black or purple and see what your rate of return is. If you're sending out letters to consumers and you're putting the label on the front as opposed to a window, change it and see what your rate of return is. It is so important to continue to watch that rate of return and understand where your money is going. I understand as an agent during AEP, some of you may have a marketing budget of $1,000. Some may be $500, some may be $10,000, some are $100,000, some are in the millions. And I grasp that. Obviously, the more money you're spending on your marketing, the more you will be aware of where that money is going. But even if you're only spending $1,000 towards your AEP marketing, you need to make sure that you're getting $1,000 times 2 back out of that marketing. If you're not, we have to reevaluate how you're marketing and who you're marketing to. Know where your sales are coming from and how to track that. Market through multiple streams to ensure that you have enough leads coming in, you have enough consumers to work, that you are ensuring yourself a higher rate of return. Your homework last week, review your income. What are you looking to make this AEP? And work backwards. How many leads do you need? How much marketing is needed? How much time do you have to put in to reach your desired application count? It may be an app count. Maybe you're looking to write 100 Medicare Advantage, 90 hospital indemnity, and 50 annuities. I don't know what your mix of business or where your licensing is will help you with that, but I need you to work backwards. Because I have a ton of agents that come in my office saying, I'm going to write 500 apps this AEP, and I ask them what their game plan is, and they say, I'm just going to sit at a primary care physician's office, and it doesn't work, right? You have to get a game plan together. Now's the time. By the way, there's 50 days left until AEP. That's it, 5-0. So please, I beg of you, if you need your multi-plan approval taken care of, if you need something created, now's the time to get it created, approved. That takes about 2 to 3 weeks. Now you're needing another week or 2 for the printer to print it off if necessary, or the whoever your mail service is to get your postcards out, your letters out for AEP. Now is the time, I beg of you. Get your marketing plan together this weekend. If you have not done so already, we'd be happy to review it with you. But begin that approval process and reach out to your printer. We had some questions last week. How many prying questions would you recommend an agent memorize? I would say between 3 and 5 per product. Prying questions being, Joyce, do you happen to have any money sitting in a CD? When would that money or when would that CD come to fruition? How much time do you have left? So I can then create a lead to sell Joyce an annuity by moving her CD, right? Prying questions are just as simple as, what pharmacy is your pharmacy of choice? Do you ever pay more than $9.85 for a name brand medication? That's right, an LIS prying question. Do you ever receive any small bills from your doctor's office, or are they just simply covered in full? Is it obviously a DSNP prying question? Are you pending any surgery in the next 90 days or 6 months? I start that underwriting process immediately. I start gathering what is it that the consumer's current situation is, and how can I make that current situation better? And as long as you're asking those prying questions, you should have 3 to 5 in your back pocket. Do you need any crowns, bridges, or implants in the next 12 months' time? Is hearing a concern to you? There's a gazillion prying questions, but I need to ask that consumer the open-ended question to allow for them to give me the data that I need to find the solution that they're looking for. Why have prying questions if we can't approach consumers? These prying questions are after you're already approached. The consumer approaches you at a Sam's Club, a Walmart, a CVS. Here in Michigan, we have Beaumont facilities open. We have Kroger facilities open here in Michigan and Indiana and Ohio, I believe. Whenever you're approached, it doesn't necessarily need to be Medicare, right? If you're a Medicare agent, get that compliance shit out of your head. You can approach people not on a Medicare foot. You can approach them on an annuity foot. You can approach them on final expense. I mean, hell, there's door knockers for final expense policies, right? You can approach them in a matter of different ways. I'm not suggesting that you run up to everyone in the grocery store and ask them about their annuities. But once you are approached, you better figure out a way to dig to find the information you're looking for as fast as humanly possible, because otherwise you're wasting my time, right? I got to get the information on who you are, what you have, what you need, and then I can help you. So I have to pry. They don't know if they're on Medicaid. They don't know if they're a Slim B, QMB plus. They don't know what their premium on their Med Sup plan is. It's just automatically deducted out of their checking or savings account. They don't know when their CD comes to fruition. They don't know. And I don't know unless I pry to gather that information from them. Aren't prying questions part of the assumptive close technique? Absolutely. How would you feel if you passed away today and your children had to spend $10,000 in burying you? How would you feel if, right? What would you do if, as salespeople, we're in charge of doing something very unique? We're in charge of creating pain for that consumer. Pain is realization, right? The reality of what are you going to do if. But that pain gets set in. We create pain to the consumer. And the more that they squirmish in their chair, the more uncomfortable they feel, the better job you're doing. I create pain. I open a wound, and then I grab a lemon, and I squeeze it in. And then I grab a tomato, and I squeeze it in, and then I pour some salt in there. And as the consumer's feeling this pain, I then pull out a Band-Aid. I'm the one with the Band-Aids. You're the one with the pain. I'm going to put a Band-Aid on your pain. And this is why you use me as an agent, because I have the best Band-Aids out there. I know what size is going to fit your wound. I know how much pain you're currently in, and I'm going to find a solution for you. That's what we do as salespeople. We create a wound, we provide the pain, and then we also provide the solution to their pain. That's what all salespeople do. Figure out how to create that pain. So continuing on, here's the reality. Only 3% of all agents sell both Medicare Advantage and Medicare supplemental plans. Let me tell you that scary statistic is 3%. There are 3% of you that are either on this call or professionals out there that are capable, willing, and able to sell both a Medicare Advantage plan and a Medicare supplemental plan. I will tell you, if you are not part of that 3%, you are leaving money on the table. I will write a consumer on a med sup plan, and yet their disabled brother who's in a skilled nursing facility needs a D-SNP. And I better be well versed on that. I'll sell a Medicare Advantage plan to a consumer. They'll get a referral from their sister in another state or what have you, and I'll sell them a med sup plan. Oftentimes, and think about your own family, you're going to have 3 or 4 individuals or siblings, and half of them went to college and half of them have this higher paying position, and the other half decided to pick up a trades or what have you, and earn a lower individual income or pay less into FICA and need a different plan. If you are steering clients into one plan or another, which many do, you are going to have a retention issue that is going to continue to affect your business, and you will not grow your business. You'll not grow the referral side, and you won't grow the longevity side. You may offer a plan to a client, once again with a sibling who has different needs, or a spouse that may be VA, right? Someone who's sick. If you're unable to sell an honor plan or a give back plan to a veteran husband or wife and a med sup plan to the other spouse, you are missing the boat. They're obviously not able to have the same plan. And if you just put them both in a carrier A plan or carrier B plan, then one of them's not going to necessarily be happy for a very long period of time. And once again, I'm assuring you, it will affect your renewals. So why don't Medicare Advantage plan agents offer med sup plans? Well, there's a ton of reasons. One, because the med sup plans increase in cost annually. Do their rates go up? Absolutely. On average, about 8% per year. That's what the inflation for healthcare goes up. That's what most of your med sup plans will go up. Tell your consumer it's about 8% per year. The Medicare Advantage plan agents don't like that. They don't want to have to review per se on an annual basis with their consumers. Med sup plans only pay for 3 to 6 years. Yes, that is true, right? Here in Michigan, we get paid hot and heavy for 3 years. If you want to go pick up Oklahoma, they get paid hot and heavy for 1 year, and then your commissions turn to crap or go down to nothing, nothing really to write home about. There basically isn't any commissions left after 6 years or after 3 years here in Michigan. So that's a concern that I have to figure out a way to rewrite my consumer in order to keep that bell curve of my income coming in, that revenue stream. You have to move them. It gets more difficult to move them as their age continues to increase and their health continues to decline. So that does become a concern. Is it more difficult over the years to move a consumer? Sometimes there are tricks of the trade. Some carriers accept 99.7% of all applicants, right? So you can always write them there. You can also play the trial right game. And if you don't know what I'm talking about, reread the Medicare and You book and understand that trial right to be able to move Med Sup, MAPD back to Med Sup. You have to renew and update the client's Part D annually. Yes, it is a customer service side during annual enrollment period to review and rewrite that prescription drug plan. It doesn't provide you much income. So 2 things. 1, automate your prescription drug sales. Get that consumer to send you an email, create a survey for them. So that way they can go in and provide you all the information they need. So that way you can run their medications, email them back or text them back with the information that you found and a PURL. So that way now you don't even need to record the call because you never even spoke to the consumer. But I will tell you, on the Med Sup side, the prescription drug plan ends up becoming, 1, the most confusing part to Medicare. Why? Because their Med Sup covers everything. And 2, it creates the largest referral sprawl that you will ever consider in this industry. That consumer is so confused on the changes and what happens with their prescription drug plan that when they converse and talk or hop on Facebook or whatever with their friends, peers, and loved ones, they too have questions and concerns about their prescription drugs. They're going to phone you. When I gather their prescription drugs, I already know the health of the consumer, right? If they're on Januvia, they're a diabetic. If they're on Lipitor or what have you, right? Simvastatin, or I can tell exactly what that consumer's health is. So I'm going to write them on the PDP, and we're going to go right into the Med Sup. What are you doing with your Med Sup? Who's it through? What are you paying? Go gather that information because I'm going to rewrite you. And now I obtain the Med Sup and the PDP. And now I just need one more product in order to really solidify that relationship. There are state appointment fees with Med Sup plans. Some carriers will cover your state appointment fees. Other carriers will not. But with Medicare supplemental plans, if you choose to pick up an adjacent state or you have a referral in another state and they want a Med Sup plan, you will need to pay that $10, $20, $50, $100, whatever it may be. Some carriers are up to almost $400 per state to offer that Med Sup plan in that state. So here's your reasons on the MAPD not to sell a Med Sup, or the excuses therein in not selling a Med Sup plan. Med Sup agents don't offer or sell MAPD plans. Why? Because the customer service on an MAPD client sometimes is absolutely daunting. As an organization, we market to Med Sup, we market to D-SNP, and we try to leave the middle group out. I do not enjoy selling a zero premium plan to a consumer that has no money. And I guess my question to them and my question to you is this. If you don't feel like you can afford a $120 a month Med Sup plan, what makes you think that you can afford a $6,700 max out of pocket? How many months, how many years do I have to keep you out of the hospital in order for you to just break even if you hit your max out of pocket? At $120 a month, you do the math. It's like 7.5 years. Can you guarantee me that in the next 7.5 years, you're not going to have something massive occur in your life? And the answer generally is no. So if the consumer is not a D-SNP agent, even if they're LIS, which we'll talk about further here in a second, but if they're not a D-SNP agent, you should be conversing about a Med Sup plan with them and conversing about a Medicare Advantage plan with them. Here's the pros and cons of a MAPD. Here's the pros and cons to a Med Sup. I sell a lot of Medicare supplemental plans to those that are on low income subsidy. I help them get on low income subsidy because the reality is, if I just freed up your Part B, that $180 a month, and now you're getting an extra $180 a month on your Social Security check, you cannot tell me that you can't afford a Med Sup plan. The customer service, I will tell you, and we're launching on a national basis our call recording platform on Monday. So excited. Why? Because your voicemail will never be full again, which is awesome, right? On the customer service side of it all. But that's not going to prevent Joyce from calling you every time she has physical therapy and gets a bill for $50 because she can't afford it. There's too many moving parts, right? Where when you have a Medicare Advantage plan, you have to not only shop their meds, but you got to make sure that their network of doctors and specialists. And what if they're on 12 specialists? Now you got to make sure that they're all in network, or you're going down the PPO route. The value-added benefits are always through third-party vendors. So let's really talk finances for a second. The carrier is going to seek out the least expensive possible dental carrier ever, and the least expensive transportation, and the least expensive OTC, right? Most of them are publicly held companies. They have to obtain and provide stock to their stockholders. So this is so important to recognize that there are a lot of moving parts on the Medicare Advantage, making sure their dentist is part of the network, helping them with their transportation, helping them obtain their over-the-counter, etc. Obviously, you have to take your AHIP and you have to certify annually, not only to offer that carrier, but to keep your renewals. So sometimes agents pick up a carrier that may or may not come into the state, come into the county, leave the state. And that's where it becomes a little more volatile on the Medicare Advantage plans. That one year you may have a carrier conducting business in your county. You write 50 individuals in that county, and the next year they pull out of that county. Now all you're doing is servicing those Medicare Advantage plan consumers. You're not adding additional revenue onto your books. You're actually losing revenue because that carrier decided to move in or out of that area. Agents don't understand the dual eligible, the chronic eligible, the low income subsidy through Social Security and how that works and how it can help your consumer, or the Medicare savings accounts, which many of you on this call do not know what an MSA is. Some of you do, but typically outside of Michigan, really hot and heavy in Texas, but it will be here in the upcoming 12 months that you will see MSA more and more as time rolls on. So the differences between an MAPD and a MedSup, statistically, and this differs slightly by state. I had a huge argument about this particular slide. Roughly 88%, 8 out of 10 consumers who don't have Medicaid, okay, so they're not D-SNP, they're over the age of 65, so they're not on disability. 9 out of 10 consumers that are over 65, not on disability, would prefer to be in a Medicare supplemental plan. 9 out of 10. Now, this is going to be staggering to some of you who are, we're just at a carrier event yesterday saying, so MAPD, they're amazing. Don't go against the grain. It's 9 out of 10. That is the number. Michigan is actually a little higher than that. If you want the numbers, go to Wikipedia, right? It may not be the most trusted source, but these numbers are also on CMS or Medicare's website. I don't go against the grain, but it does come down to where you're marketing and how you're marketing to. If you look at maps on where the MedSups are sold and the Medicare Advantage are sold, the Medicare supplemental plans are sold in the rural areas. Why? Because you only have 2 primary care physicians in your little podunk town. And to get both of those primary care physicians to accept carrier A, B, C, and D on a Medicare Advantage plan is very difficult. They don't want to accept all these Medicare Advantage plans and take the lower income or the lower amount that's being offered as a negotiated price for their services. So those individuals in rural areas are pretty much stuck to purchasing MedSup plans. Those individuals with higher populations, those that are in the outskirts of a city or in a city, have a slew of physicians, hospitals, etc., where that allows them the ability to have a larger network, and it allows them the ability to have more Medicare Advantage plan carriers, which will then increase, right, the Medicare Advantage plan sales in that area. Watch how you're marketing. If you're marketing at a grassroots events, you're probably not going to sell a Medicare supplemental plan. But if you're sending out mailer pieces to rural areas, you most likely will have a much higher MedSup sales compared to the Medicare Advantage plans. Don't believe everything when MAPD carriers sell you on why Medicare Advantage plans are so superior. They're in it for the money, not protecting your clients or your community. They don't give a shit about your clients. They don't. They'll take care of the claims and the customer service, but they're all out for the market share of the community. So please, as you go through some of these certifications and they're like, we're the best because, please do not get into the hype of all of that. It's not necessarily true. Your difference is commercial advertising. You will never, ever see a commercial for apples on TV. It won't happen. There's no profit in it, right? They're always going to have Apple Cinnamon Cheerios or some other commercial that has apples in it, perhaps, but it's a product that they're marketing to you. You will never see a MedSup commercial, ever. It will never happen. And if you can prove me wrong, please do so. But we are all up against the ex-NFL Hall of Famer, the retired TV show personalities. We're up against these individuals during the annual enrollment period. Who are they marketing to? How are they marketing? And obviously this gets us into the whole call recording platform. But this is who you're up against. So how are you as an agent going to combat this? They're spending millions and millions of dollars on these commercials, which I know I don't have the funding to compete, nor do you. So what are you doing as an agent to help get yourself through when your clients call you and say, oh my gosh, I just reached out to Joe Namath? How are you protecting yourself up front? So when they see the commercial, they say, what a jackass. If I have questions, I know who to call. I have their magnet on my fridge. I have their business card in my wallet, and I have their cell phone programmed into my cell phone. I'm going to call and make sure that I don't qualify for this JJ Walker plan. You have to be able to compete with this, but I will tell you, the consumer is bombarded. Medicare Advantage, Medicare Advantage, Medicare Advantage everywhere they go. And it is going really against the grain of our society and what they're actually wanting out of their plan and out of their coverage. Help your community. MedSup rates, they do increase every year. And that provides you the ability to actually have a conversation with your consumer, possibly even mid-year. The Part D is where all the confusion lies once again. This is where I obtain all my MedSup referrals, is because of that prescription drug plan. And the confusion, I may not get you this year, but I'll get you next year. And I'm very patient on waiting for the right time to change that consumer's MedSup plan. The clients change their plans on average every 3 years. You write them, they have a 12-month rate lock, right? They get the first rate increase, and because you use the SES quoting engine, because you wrote them on the least expensive plan at that time, even if it had a 10% rate increase and another carrier had a 6% rate increase, it's still the least expensive plan. So now you get them for another year without having to do anything. By that third year, they are phoning out to you. They are asking you, am I still in the right plan? And at that point in time, my commissions here in Michigan just got cut in half or went down to 5% or whatever. And I should be, just like a lease retention, right? I should be retaining that consumer and rewriting them as long as humanly possible to keep that bell curve of my renewals and my commission up. MedSup clients are more loyal and provide more referrals. And that is the reality. They are out in their community and their 6 degrees of separation. And they have others that actually have funds that need annuities, that have long-term care needs, etc. But for whatever reason, I have found that the MedSup consumer, once I have them and they're turning 65 and I can explain the MAPD and the MedSup, I have them for life. And then the referrals from them are far stronger than on a D-SNP consumer. Once again, know your 1-year trial right to move unhealthy clients or to take other agents' clients that are too unhealthy to move. This legacy plan C in Michigan that used to be $112 forever, and then it went up to $117 and was this untouchable MedSup policy. Now these consumers are paying $390 a month and their agent doesn't know how to move them. Be the agent that knows how to move them. Utilize their trial right, get them off that legacy C plan and into a policy that saves them $3,000 a year. If I can save you $3,000 a year, you are damn right that you're going to spread my name like wildfire to all of your other sick friends that are on the legacy C plan. Medicare Advantage plans are a great fit for those that are on VA, Medicaid, and or low-income subsidy. That is the niche. To have someone, the state, the veterans, what have you, pick up that max out of pocket, pick up that $6,700. This is the fit to where Medicare Advantage plans come into play. And is there a huge need out there? Absolutely. And as you attend our lunch and learns and our mixers, we'll actually be providing you maps over the last few years to show you the growth here in Michigan with your DSNP and MAPD plans. It's staggering, frankly. That is where your Medicare Advantage plans come into a niche. You selling someone who makes $60,000 a year an MAPD plan because they're frugal and you couldn't talk them out of it into a Med Sup plan, you will have that customer service, even from someone who can afford their bills, saying, what the hell? Why didn't you talk to me about this? If your clients aren't receiving extra benefits or have an organization or agency covering their MOOP, they may be phoning you extensively. And that's the reality. That's why half the agents I phone that are MAPD agents have full voicemails, right? Because you're so tired of Joan calling you day after day after day after day because she's just so disgruntled with her policy. D-SNPs and C-SNPs are great products to offer clients who can't afford a Med Sup. If, once again, your client can't afford $120 a month, they can't afford $7,500. They're going to get on a payment plan with the hospital network and they'll never be able to afford a Med Sup because now they're paying $150 out to the hospital and $100 out to their anesthesiologist, and all of a sudden now they're burned. You can offer Med Sup clients to those on LIS. It's a great way to sell those products. The biggest difference is Medicare Advantage plans do not cover your Part B excess charges. Not only is that consumer limited to a network, HMO, PPO, I don't give a damn. But if you want to go to the Mayo Clinic, God forbid you found a lump, and you want to go to the best cancer clinic out there, the Mayo Clinic charges more than what Medicare deems a reasonable charge. You are responsible for a portion of the difference of that cost. So with the Medicare Advantage plan, you're not going to the Mayo Clinic, right? Let's just put it that way. You're going to be stuck in that network of doctors and hospitals, which they're out of network. And so on an HMO plan, you're not covered anyway. Or on a PPO plan, you're going to be double billed, right? Because you're out of network. But now you also have the Part B excess charges. With the Medicare Advantage plan, you're only allowed 1 year. You get one try for 1 year to try out this Medicare Advantage plan. If you get sick in year 2, 3, 4 down the road, well, Bill, you're stuck in this Medicare Advantage plan world for the rest of your days on Medicare. So I'm sorry you had a stroke. I'm sorry that you have a defibrillator. I'm really sorry that you got dementia or Alzheimer's. But now you may be paying out $6,700 a year every year for the rest of your days on Medicare, where you would have been better off paying the premium to have a Med Sup plan. That 1 year trial right is so important. The skilled nursing, days 1 through 20 after a hospitalization stay, then you're either paying a copayment or a percentage, or you're paying all of it. The infusions. If you have ulcerative colitis, you have rheumatoid arthritis, you're receiving Remicade. It's an infusion at the doctor's office. It's incredibly expensive. It's like $1,800 every 6 weeks. Your Medicare Advantage plan will cover as good as or better than your original Medicare. If your consumer's spending 20% of $1,800 every 6 weeks, they're better off on a Med Sup plan. So where will your Medicare Advantage plan burn your consumer? If A, they have the max out of pocket that they're responsible for, that they don't have a D-SNP, C-SNP, VA behind them covering their risk. And secondly, it comes into the skilled nursing and the Part B medications, including the chemotherapy and radiation. Not one carrier, not one covers chemotherapy better than 20%. So if your client on a Medicare Advantage plan gets cancer, I assure you, you will be getting phone calls until the day's end because they're going to have stacks of bills and explanations and co-payments, and they're not going to know what to do with themselves. So one, hospital indemnity, right? We're going to offer a hospital indemnity plan, and we're going to ask the prying question, do you know anyone who's ever had cancer? And you know what their answer is going to be. And now I'm into the cancer benefit on a hospital indemnity plan. No consumer will ever call you and say, hey, I didn't want that $10,000 cancer plan when I got cancer. They're never going to do it. So don't go against the grain of society. That's the bottom line. I will tell you, your retention will help you, your referrals will help you. The initial commission is not worth it when the client disenrolls in 90 days. More importantly, if you are at a Walmart, this AEP, great. If you're at a Sam's Club, CVS, Kroger, you're at Beaumont in the lobby, if you don't know what I'm talking about, you need to reach out to me or to Agent Services. We have a ton of events and locations where you can go and set up shop and be able to obtain leads and consent to contact to be able to then go back out and rewrite that consumer. But the bottom line is, if you're writing the wrong plan, they're going to drop you in 90 days and there's no referral, and that time is then wasted. Your gas to that event is wasted. But if you're going to write someone that's currently on a MedSup plan, you find Joyce and she's 76 and you hook her on that dental while standing at a Walmart plan, you just removed Joyce's trial right. So when Joyce drops your policy during the open enrollment period because she felt duped, you didn't explain what she had, and her specialist isn't in network and her meds aren't covered, and oh my, she wants her MedSup plan back. You're burning that MedSup agent, or yourself for that matter. You're removing the potential of getting full commission ever again on that consumer because Joyce is unhealthy and now she's using her trial right to be guaranteed issued back into a MedSup plan. $25 commission on most carriers. It's like 0.8% on Transamerica, 0.4% on United Health. It's nothing. So now what? Now I lost my MedSup consumer because an agent in a Walmart store wrote them on an MAPD. The consumer was confused. The agent was confused. The agent obviously didn't know Joyce's needs or didn't ask the prying questions necessary to find her needs. Joyce then circles back to me saying, oh my God, John, I did something terribly wrong. I need your help. And I say, okay, Joyce, I'll help you. And now I don't get paid for helping Joyce. And I lose my renewals for life. You lose your initial commission and renewals. And the consumer then is back to where they were and no one's made any money. Please ask the prying questions. Go with the grain. The MedSup client you were selling an MAPD plan may be too ill and have more out-of-pocket expenses on that MAPD plan. Realize that and ask them what their needs are. Obviously, always utilize your tools. You should be on the SES quoting engine for the lowest rates. For your consumers to avoid premature movement or buyer's remorse, right? That I'm providing, and you can copy and paste right off the quoting engine into an email. Here's 25 plans. I highlight the least expensive, one or two. This is my recommendation, and here's why. So ACE just launched 2 days ago, new MedSup carrier in Michigan. You have Royal Arcanum, which some of you don't know are paying a $275 per app till the end of the year. ACE is paying a $300 per app until the end of the year. You have Prosperity Life. You have all kinds of new carriers coming. And I assure you, if you're using anyone else's quoting engine, any other FMO's quoting engine, you will not have all the carriers on there, and you may not be doing the right thing for the consumer, or you may be opening yourself to allow for someone like me to come in and backdoor you and offering that consumer a lower premium. This week, we're going to figure out a way to uphold our Medicare fiduciary responsibility in helping our community. We're going to figure out enough prime questions to truly help someone's mother, aunt, sister, right? How do you want your mother treated? And I think about that with every consumer. Make them your loved one. Share the love with them. At the end of the appointment, if they get up and obviously cleanliness, etc., I get all that. But if they want to give you a hug, by God, accept it, right? It's one of those situations where we can touch someone so deeply with what we do that it's not about the $200 initial commission. It's not. It is about helping the community and getting into that 6 degrees of separation with each one of your clients in their community. Have enough Medicare Advantage plans to know what you're offering and where those niches are. For instance, Zing just came out with contracting, right? No cost insulin is huge. More importantly, C-SNP, any diabetic type 1 or type 2, there's their niche. Figure out what the niche is for each carrier. Figure out the value-added benefits. If you need help, we will supply you with an Excel spreadsheet. It's nearly done. Should be done by Tuesday when our first Lunch and Learn kicks off here in Detroit. But know and have enough carriers. Here in Michigan, there's only 10. You got 10 carriers. If you add additional states, 5 basically are the national guys, right? And then you may need another regional or 2. Don't go out and appoint with the carriers that you may only sell 1 or 2 apps with, because once again, you're either going to need to sell us your book of business, sell it to another agent, become licensed only and assign your commissions to us so we can pay you if you choose not to recertify or reappoint with that carrier because you only had 1 or 2 sales with them. Utilize the SCS quoting engine. Now, recognizing that you have MedSup appointment fees that need paid when you generally pick up a MedSup contract, it's far less expensive in your resident state, but if you add additional states, there are additional costs. So get on the quoting engine and do not go gangbusters picking up MedSup carriers off the SCS agent portal, because you'll be shocked when you start having to pay appointment fees, and there may only be 3 or 4 carriers that are very strong in that state that you're offering. Contract with at least 5 MAPD carriers. Get certified and know why and where you're going to be offering those plans. If you do business in the middle of the state of Michigan, you know what 5 carriers are offering coverage in that area. If you're going to be conducting business in Southeast Michigan, you know what carriers you should be picking up. There's only 10. You should have more than just the blue and the green, though, right? It's so important to make sure that you have the ability to truly help that consumer with whatever need and whatever niche that MAPD carrier has, not only this year or last year. Review your county maps and the plan highlights to figure out exactly what you're going to do in targeting your audience. Have at least 5 MedSup carriers. Download their underwriting guides and review the MACRA offerings, right? The MACRA, January 1st, 2020, if you were born, or let me rephrase, if you turned 65 or had your 65th birthday prior to 1/1/2020, you're in the MACRA, right? You can pick up a Plan F or a Plan C. If you're born after, or you're not 65 by 1/1/2020, no Plan C, no Plan F for you, right? You're in the G, D, N stage of your life. So understand who offers what for MACRA, what the plans are, and pick up your 5 MedSup carriers. Most of them are just in time. There are a few that aren't. There are a few states that aren't as well. But get yourself prepared and contract with the 5 most realistic carriers you're going to be offering. So that way you have capability of writing an online app when you are ready to write that application. as opposed to needing a paper application or requesting one from us. Utilize the SCS agent website and text us or call us. 24-hour text line. Our average rate of return on a text is about 2.5 minutes right now. It gets a little longer during AEP, but 2.5 minutes is far better than waiting for a carrier. And more importantly, a lot of the FMOs, NMOs out there, they close shop early on Fridays for whatever reason. And there is no way of getting a hold of anyone after noon or 5 o'clock. So we do provide that to you. All of your carriers, I should say 99% of the carriers, there's a few that will be implementing this weekend onto the agent portal. Almost all your carriers are on the agent portal with electronic contracting for you. If you're not aware, all of your fax lines, your agent service numbers, who to contact, the carrier address for the life insurance annuities, that's all on the SCS agent portal as well. So if you do need the agent service number to whatever carrier, this is your hub as an agent. So that way you're able to go in, not only contract, but also see all of the carrier information that you may need. Meet your carriers. This upcoming Tuesday, Wednesday, Oak Street Health, come in. If you have not visited an Oak Street Health or had a tour, you should certainly come in. This upcoming Tuesday at Oak Street in Highland Park, I will be discussing compliance, the recordings necessary, and what you should be doing as an agent, not listening to the carriers, right? We've already gathered all of our information, and we have a solution on the call recording platform for you, which is launching on Monday, the 15th. We'll be reviewing it on Tuesday. Get a tour of Oak Street Health, visit Humana, and come meet Zing. Wednesday, we have WellCare. You can complete your priority health certifications at the Wednesday, August 17th. If you're unable to attend our lunch and learns, we're having a mixer from 4 to 6. Stop in. There's store prizes. We're doing drawings for iPads. It'll be an amazing time. And then Tuesday, the 13th and 14th of September, you can complete your Aetna requirements. So Aetna, Priority Health, and HAP are the 3 here in Michigan that are requiring a webinar or a face-to-face. If you have not completed that yet, or you need help finding where to go, reach out. But you can complete your Aetna learning requirement Tuesday the 13th, and then we're having a mixer shortly after at the Rusty Bucket in Bloomfield Hills. And then on Wednesday, you can complete your priority health certifications. So that way you're all ready and prepared before the end of the month. We will be hosting 2 webinars. Thursday the 18th, we'll have Humana, Melina, and Zing on. 2023, what's happening in regards to changes, counties, plans, highlights, overviews, sneak peeks, first looks. On September 20th, you can hop on if you have not done so or were unable to reach out or attend any of our lunch and learns. So that way you can complete your priority health certifications. I certainly hope I can see some of you here at the lunch and learns. Get reconnected. I know COVID's been a nightmare. I know a lot of us have been hiding, trying to make it through whatever we've been trying to make it through on a global pandemic. Come out, reconnect. I'd love for you to meet your carrier reps, get in touch with them, get their business cards, so that way if you need anything during annual enrollment period, you can rely on them as well. Come out and bump elbows with other professionals and colleagues. I can't tell you the amazing amount of information that has been flowing around the last couple days to the last few weeks of I'm thinking of, I'm implementing, how about this? You need to be part of this. There's so much thought process and automation and marketing that you need to be privy to that the carriers are not going to privy you on. Get your homework done this week. We'll be back on in a week's time. It is 11 o'clock. I kept you to an hour. I am going to log off, but I'll remain on for the chat if you need anything. We're here 24/7 to assist you. Get your certifications done. If you have not sent us your AHIP, please get that over to us. Hopefully you completed it in the month of July so I can reimburse you for it. Any marketing co-ops, any marketing plans, please get with me. We have 50 days left until AEP hits. It may sound like an eternity. It is not. We have a ton to do to get you prepared to have an amazing AEP and continue to increase your revenue. Once again, I'm John Fallon with Senior Enrollment Solutions. I appreciate you all attending. Happy Friday to you, and I'll talk to you in a week's time.